Hello everybody, stocks rallied again on Monday. Volume was actually lower than the session before Friday. So volume was not only lower, but it was below average. So overall, this powerful move off the very recent lows continues to be nothing but a short covering rally. And I gotta admit, it looks pretty much like garbage overall. I mean, it's another V-shaped rally. Another rally that's coming after a heavier volume sell-off. Very few stocks are even coming close to triggering actionable signals, and when they do trigger, it's nothing but utility stocks. And before I get to that, I want to show you what some of these other bigger cap stocks look like, just going down the list. Facebook rallying on no volume. BOP is continuing to weaken. All internal technical indicators are also weakening. So we got a V-shaped bounce into more, where it rolled over before, more resistance levels. So overall, Facebook looks like junk. LUV, Southwest Airlines, there's your V-shaped rally. Heavier volume today probably indicates a reversal session right at the 5200-day moving average. Coach looking pretty weak. Amazon's got that V-shaped rally back to the 50-day moving average on below average volume. DD, you can see here another V-shaped rally right to resistance, no volume on the turnaround. UAL, similar situation, heavier above average volume sell-off and not much accumulation off the lows, another V-shape. C-Trip looks pretty good, but that's China. Coca-Cola looks good, but that's a very defensive related stock. Even McDonald's seems to be getting a lot of distribution here at the 50-day moving average. Occidental Petroleum could work out, but once again, the volume on the right side is lower than the volume on the left side. Procter & Gamble is a defensive-related stock, kind of different. Mattel is the best-looking one. I think that's still getting some oomph from the Star Wars and Disney collaboration, that movie that came out with its toys doing very well. Texas Instrument, another stock rallying on no volume. Nvidia, well, it's got volume on its rallies, it's got big intraday reversals off the highs. So without it closing near the highs, that's leaving a lot to the imagination on its rally attempt. Microsoft, similar situation, rally on no volume right to resistance levels. Nike, same thing. So it's a similar situation no matter what you look at. Visa, same thing, heavier volume on the sell-off, low volume on this rally. AT&T is consolidating on lower volume. It might break out, but like its friend Verizon, Verizon's trying to break out on no volume, so I'm not sure how we're supposed to be too bullish on that. Delta Airlines retook its 5200-day moving average, but isn't doing much. ATVI, similar situation. Starbucks, you can see low volume rally. Home Depot, lower volume rally compared to the most recent sell-off. And there's your only leader still, utility stocks, because gold had a pretty ugly session today with a lot of stocks looking like they're reversing actually in the gold sector. RIC and MGH were the two worst looking ones, lower price, but overall just not very impressive out there. General Electric, similar situation, no accumulation as it tries to base out. So I'm not sure how this rally continues to sustain itself. What I'll be looking for is to see how the market trades on the pullback. If we hit the 50-day moving average here at the NASDAQ, as we are now right at the February highs, so we're at some key resistance levels. If we reverse on heavier volume, you can be sure I will be increasing my hedges and or short positions, and I will raise my stops on my long positions. All of them are working. They should all be in the money now, except for like OGS, which is barely in the red. What I'm down like 0.56% on that position, but most of the stocks are either in the red or flat, or in the green or flat since going long. And I don't know how much longer that's going to take. JBSS, for instance, is a good looking stock, but I figured it would have been stronger by now. The final sell stop now gets raised to these lows. From these lows to the 20-day moving average is now above those lows. And since we're still operating under a sell signal, I want to stay defensive here rather than aggressive. I know when to be aggressive. Been doing this for a while, and based on what I see right now on an end-of-day basis, it's not a time to be aggressive. And intraday, there were not a whole lot of early morning spikers or candidates. The only one I was watching this morning was VRNG for a panic sell-off. That didn't even work, so pretty lame day overall, which leads us to really the only two stocks that interest me. Well, there's three. ELMD is reversing off its highs, big intraday reversal, closing below where it opened. It looks like it could be putting in a reversal day, but once again, I'll have to see how it trades intraday to see if I want to go short based on any kind of early morning fade or green to red move or whatever, but I just don't want to go short on an end-of-day basis. TRXC would have worked yesterday or Friday as I was an end-of-day short potential. There were no shares of IB, and to be honest with you, the best shorting opportunity came off the early morning fade. It sold off too much, and the bounce didn't go far enough back to the resistance level, so I would have completely missed it, but the opportune level to go short was around the 4 area. It got all the way down to 282 intraday, so that would have been a hell of a short. Unfortunately, no shares at IB, which now leads us to our 2 best positions, or signals overall today. FIT, Fitbit, following earnings, looks like it had a pretty good day, appears to have been bottoming. That intraday reversal right back here on 211 came on strong volume. It's moved higher, heavier volume on the up day and the one down day on Friday, lower volume. Today, big volume surge. So FIT looks like it could have a short squeeze, a little higher price stock than I like to follow. So intraday, I don't know, it'll be more something I just watch. I have really no interest in getting long. But that then leads us to our only new long position, which is SPKE. It's another utility stock. Pocket pivot point signal on an extremely strong volume surge. I've been very interested in this stock ever since its extremely powerful move on 122. It started, just continue to wedge higher, pulled back, some accumulation on the basis lows, kind of some iffy trading, but whatever. You know, there's a big volume surge today. BOP surge back to green, and it's a breakout today, almost to new 52-week highs. Only my price volume BOP scan because, you know, it's a thinner stock. It is not Cansum quality, but it's one of the best looking utility stocks out there. Now that being said, I had 2 utility longs this morning. EBR was the best one. It gapped well above my limit order. My limit order was at 153. It only traded down to 157 today. Normally what I do once stocks gap away from my entry, I then move my limit up to the low a day of today's session, which would be 157. However, EBR has a history of not holding its gaps. It did back here in March, and I will regret if it does decide to go ahead and move up 48% in 1 month. So if it moves up 48% in 1 month again, I'll be kind of pissed that I didn't do this. But in this market, I really don't care. If I miss it, I miss it. The volume on today's move was below average on the gap up. Now, as you'll see back here, the last time it gapped up and made that move, volume was above average. If volume would have been above average today, sure. What I might do is do half at 153, half at 157. As it is, the limit will stay at 153, good till cancel. If it hits, it hits. If not, I don't care. The other new long position was AGR. I said if it was gapping below, what was the low there? There we go. Oh, what's not enough data? Okay, back here. If it was opening below 40.72 this morning, I said the trade was off. The ask at the morning, this morning, the ask was around 40 for at least an hour following earnings. So 40 is below 40.72, so the trade came off. Gap down to 38 in the morning, closed to 38.75, but obviously no trade was taken. So AGR was a complete forget about it, canceled. But EBR is the only one on the book, so that remains good to cancel. And SPKE 26.41 will be my limit on this one. Considering all the gap hires, would rather go ahead and chase up an extra 10 cents than miss it completely. But the bottom line is this rally is trash. Sentiment got very bearish on the short term. I will remind everyone, bearish got super bad in 2000 before the major sell-off in 2001 and 2002. And they got super ugly at the end of 2007, early part of 2008, or actually at the early part of 2008 before the sell-off got really bad in 2008. So everybody says that the AAII and II bears are too high, bulls are too low, and yes, it normally does lead to a good market rally unless you're about to go into a bear market. Then it's actually one of the first signs that you are going to go into a bear market whenever you don't rally with that kind of extreme sentiment. So it's really important to see how we pull back here. Lower volume pullback, great. Heavier volume pullback, no good, especially if the next volume attempt comes with no volume. Bottom line is a lot of these charts are set up for potential short sale candidates, not new long positions. Trade carefully. Cash is king for new investors.